Hello, hello. Good evening, everyone. We are back for another session with chat with Momvestors.
Good evening.
I'm Carine and my sister Nikky. We are going to continue on what we started last time. What was that, sis?
We discussed last time what your maximum purchase price should be when you're trying to buy a rental property, either one that you want to live in and rent out some part of it, or one that you just want to rent it out in full, whether a townhouse, single family home, a duplex, triplex, whatever it is. So, what your maximum purchase price should be, and the parameters you should be considering when putting those numbers together to arrive at the maximum offer you should be placing on a property that is listed for sale.
Exactly, exactly. And we promise that today, in about 15 minutes, we aim to be on time. We are going to share how we use that concept of how do you know what your maximum purchase price is? How do we use that concept with our exit strategy, which is infill development? Okay,
And what
let's
is
get
infill? What is infill development? Because some people
yeah,
might
let's
not
start
know
with
what
that,
that is.
sis. Let's start with that. Yeah, go ahead, sis. What is infill development? Quickly, we have
Most
15
people,
minutes tonight, eh?
most
We
people
have
have
15
heard
minutes.
of land development, and that's pretty self-explanatory. You have a land, and you're developing the land by building something new on it. But infill development, on the other hand, is you have a land that has a building already existing on it. It could be a rundown building. It could be a fairly okay building with a lot of like space, a lot of land space, then demolishing or breaking down or tearing down whatever is already existent on that land and building something new on it is what we call infill development.
Excellent. That's 101 infill development with Nikki. Thank you, sis. So let's get into it. Let's get into it. I'm gonna share my screen. Last time I tried those whiteboards, it
Oh my
wasn't
God.
really convenient. So I'm gonna share an Excel file this time.
Your patience, you had, no, your patience is top notch. I could not handle.
That's okay. Everything we can to help bring some value, right? So
So how do you even start? How do you start when you're trying to do an infill development?
okay, sis, hold on. What do you see? Can you help me?
Make your Excel bigger. Let the Excel spreadsheet fill your screen. Just make it
Okay.
bigger. Yep.
Yeah. You see
Yep.
my Excel, right?
Yep. I see it.
Excellent. Excellent.
So
Perfect.
yeah, where do you start? Where do you even, begin to think about the potential of infill development? Well, this is going to be kind of a two-part series. The first part being what are the numbers you consider when you are looking into a land development or infill development potential. And the other part is what makes you even think about infill development? What makes you think that a land development or infill development is a strategy that you want to explore when you're looking at a property that is listed for sale? So those are the two eye level topics that we're going to cover. So tonight we'll cover the numbers, and in the next 2 weeks we will cover more of the parameters, the the legalities, the zoning, the regulations, all of that
So
in 2 weeks.
next week we're going to answer that question. How do you even know that the exit
Next 2
strategy.
weeks.
Sorry, next 2 weeks. Next
Next time.
Next chat we will be answering the question, how do I even know that when I buy this property, I can have an infill development as an exit strategy? We're going to answer that question. So for tonight, we will assume that we have already done that, and that we know we are going to buy a property. We want to buy a property. We want to make an offer on a property with an exit strategy being the infill development. This is our assumption for tonight. Okay, let's get into it, sis. So tonight we assume that exit strategy is infill. Okay. What do we do?
So now you've seen the land. You've seen the asking price.
Yes.
One of the things we covered last time was when you see the listing or asking price of a land, then you're already thinking about how much you need as a down payment. What are the rental income or the revenue of the building as it is? What are your expenses of that building? And then what is your target cash flow? What is your goal for that building? So we covered all of that last week. You guys can catch up on that on our YouTube channel. I believe the videos will be up sometime this week. So you can catch up on that and watch that, and then watch this session of the land development. So now let's assume this land, this property is listed for, let's say, 1.4 million.
Okay. Yeah. Okay.
So now you're looking at a property that is currently listed for 1.4 million. One of the questions you ask yourself is, how am I going to get a mortgage to buy that land? What is the land offering as is, or what is the property on the land offering as is? Again, we have determined that infill development is what we will be doing with this land. We're not doing a rental with it. However, we want to know if the current building that is on this land that we're buying has any revenue to it. That's one thing we want to know. Then you want to know how much you need as a down payment to buy this land, this building. And when you're buying the building, one of the things in your financing is, depending on what lender you're using. Again, big disclaimer, whenever you're doing any of this, make sure you're talking to your mortgage broker or your bank. If you work directly with your bank and not with a mortgage broker, just make sure you're talking to a financial expert, a mortgage expert on purchasing a building, a commercial building or a rental building. So now you want to know what your revenue is for this land, for this property that is currently sitting on the land.
Yeah.
You want to know how much cash you need, because the bank needs to see a down payment. So you want to know how much cash you need as a down payment for that land. Are you buying the land of 1.4 million? Are you buying it as the value at that point, or what is because for us, what we do when we see a land that we know that we are going to do an infill development, we want to know the value of the land as is. So the first thing we do is order an appraisal. So I'm going to pause here and differentiate the two things. So for an infill development, we order an appraisal to know the value of the land, not the building, the land as is, with whether a nice looking building or a rundown building on it. We want to know what it looks like, what the value is, versus when you were buying as a rental property. Well, it is the bank's responsibility to order an appraisal. You're doing comparables with your realtor at that point. Okay, so now back to infill. So we order an appraisal. We want to know what the value of that land is. Based on the value, then we want to know if we will be financing at the mortgage at the 1.4 million, assuming that it appraised for 2 million, for example. So do we want to finance it at the 1.4 million, or do we want to finance it at the 2 million value, provided that the lender accepts to finance at the value rather than the purchase price? So again, these are things that will arise as discussion with your mortgage broker when you're putting together your package of this land development, infill development.
However, sis, if I may jump in here, remember, we are here to estimate the offer price to the seller, right? They have listed that property at 1.4 million. Yes, we have an appraisal at 2 million. We don't know, like my sis said, if the bank is going to consider the 1.4 or the 2 million. So for our estimation, we always consider the worst case scenario. Let's say that the bank will only consider, and they most likely will always go with the worst case scenario, which is consider the 1.4 million for the financing number. Okay, so always go with the worst case scenario. So meaning they will consider that your land is worth less than what it was appraised for. Okay, so they will not taking, even though they will be happy, they will consider the fact that the land has been appraised for 2 million, because for them it means the property that they are financing is actually higher in value than what they are financing it for. So that's why they would go for the 1.4 million. Most likely, the worst case scenario in our case. Go ahead, sis. Yeah.
So again, back to the question, what should we offer to purchase the land for or the property for? Okay. So we know that the asking price is 1.4. With that asking price, we assume a 20% down payment, which is typical for buying any investment property. You need 20% down typically, but we like to work more on the 25% just because this is a infill development potential versus when you're just buying a rental. It's just your financing is easier when you have more skin in the game than when you have less. Okay, so now we know that if we put 20% down, just for easy number, we need 280,000 just for the down payment. Then you have the closing costs. Normally we would use like a 5%, like 2 to 5% for our closing costs. So again, it depends on the type of lawyer you're using. You have also land transfer tax, which is usually 1% of the purchase price in Ontario. Yes, we're in Ontario.
Yeah.
So now you have those closing costs. So first we analyze it as if it were a rental, knowing that it most likely will not cash flow because we're not buying it as a rental property. We're buying the building because of the land potential, not necessarily because the building cash flows, where we would expect the 1.4 million if we were buying a rental property to have an at least 140K revenue or something like that, anyways, so you have your closing costs. What will it cost you to maintain this building, to carry this building? We call it the carrying cost, and that's under the expenses. What will it cost you to carry this building? So say the building is rented out or not, what would it cost you? So you have first your utilities, your property taxes. Those are things that you would have to pay for. Your insurance, whether or not you're renting out that building while you do your pre-development activities, these are expenses that you would most likely need to incur while you're carrying the building on the land. We can make an assumption, sis, that the building on this 1.4 million land has a monthly rent of, say, let's assume it's a fourplex that is on it or whatever. We can
That's
assume
okay, sis. Don't go with the concept. We probably don't need otherwise it's going to take us too much time. Go with the concept.
Let's assume a revenue of 10,000 a month. Whatever.
Okay.
But then you have this carrying cost of, okay, actually 10,000 a month might be a lot, but let's assume a carrying cost of like, I don't know, 15,000 a month, because, you have your mortgage payment on that land too. So, a monthly expense of 15,000, a revenue of 10,000. Now that's just for the building. Now you have to deal with the development part of that land, which is you want to bring it to construction ready or shovel ready position where you're able to build whatever vision you have for the land, where you're able to build it on now. So how do we arrive at that? How do you see the end from the beginning? How do you see your building on that land straight from the acquisition of the land, which is what we do? We are already thinking about the end from the beginning, and we are very, very, very conservative when we're running our numbers, when we're doing our performance. So, again, a building on a land that we like, that we've done those things that we would explain in 2 weeks' time, that we've done those things on that land, and we know that we want to do an infill on the land. It is listed for 1.4 million. We know we need a down payment of 280K, which is 20%. We need the closing costs. We calculated the expenses, how much it will cost us to carry the building every month, just as is, as a building on a land, and the revenue that the building generates.
Note that at this point, we are not cash flowing because the cash flow is negative when we're buying that property. But like Nikky says, we are buying this property for its land potential. We are not buying it as a rental as is. That's why we could consider, and I say could because ideally we also like it to cash flow even as is. That's why we do infill, because it will help us with the carrying cost. Okay, but in this example, we are not cash flowing.
And at this point, we don't really care about the cash flow. We don't care about the cash flow at this point. Okay, so now, how does your building magically appear on the land? The new building that you want, how does it apply? How do you even know, what that building is going to look like? Now you have the pre-development activities, is what they're called. With the pre-development activities, this is the stage where you will be talking to your urban planner, actually, first of all, Your urban planner is going to be the one to tell you and confirm with you after you've done all of those activities we will be discussing in 2 weeks' time. The urban planner is going to be the one to confirm with you that your vision for that land is actually feasible. So in this example, just because we are used to building 24 units developments, I'm going to assume that in this example here, my urban planner, I went to him or her and told him or her of my land that I have, and they confirmed that, yes, you can put 24 units on this land. In fact, you can put a 28 unit or even a 30 unit. That urban planner will be the one to confirm with you, based on the zoning bylaws, what you're able to build on that land. Okay. So now you know that you can build at least a 24 unit. Again, we're putting the numbers together to get to the end and then bring ourselves back to the beginning to know what we should be offering as the purchase price. So your urban planner, I've told you, you can do a 24 unit. In our case, we are educated. We're educated land developers. We're educated real estate developers. So we have what we call like a track sheet, if you will, or a cheat sheet, if you would call it that. And these cheat sheets are based on, you know, the assumptions of what people in our community have built similar buildings or whatever that they've built. Oh, one sec. Can you hear me?
Yes, sis, I can hear you.
Did I freeze?
No, that's okay.
Okay. My Zoom went away.
We're still here.
Okay. So anyways, so you now know at this point that you can build a 24 unit. So what will it cost you to build a 24 unit or 30 units, whatever it is? And to know that number, you would have spoken or interviewed a builder, an architect, all sort of consultants to get quotes and estimates of what it will cost them to put together different reports and what it will cost them to put together the architectural drawing and blah, blah, blah. So let's assume they say it's going to cost you to bring that building up, say 10 million.
So this is pre-development cost as well as construction cost.
As well as construction costs, yes.
Altogether, a 10 million, yeah. For 24 units.
Mm-hmm.
Yeah.
And all while doing all of this, you will also have done, while you're doing your pre-development activities, one of the things that is included in there is also like an appraisal of what your building would be worth when it's up. So anyways, just to say, we've made an assumption of the 10 million for construction costs and pre-development costs. Now you have an assumption of what your building will be generating as an income when it's standing. Based on all of those numbers, we work our way back and say, does my purchase price of 1.4 work? Does it make my building cash flow when the new building is standing? What areas can I reduce my expenses? Well, a reduction in the purchase price of 1.4 to say 1 million makes sense, such that it helps my building, my new construction building, to cash flow in the future. So these are some of the parameters that we consider when we're putting together an offer to purchase a building that has a land development potential. Okay.
So compared to someone buying just a rental, the main difference here I mean, the concept itself is the same. You always start with the end, your exit strategy, and you walk your way up, backwards, I should say, tweaking the different parameters that you have to encounter, especially the cost that you have to incur to in order to know what is the offer price that you should offer to the seller despite whatever they are asking for. The main difference for us here is that we have this cost compared to a rental property because yes, we are taking it as a rental property, but we also are doing an infill. So
Yep.
that
So
is how we
all
do it.
of this, in case it's like scary to someone listening to it, you don't have to solely rely on your own abilities or your own, not just even your education. There are experts. For us, we interview a lot, the different consultants and experts in this business that we work with. So we're learning every day, every single day from dealing with different consultants. We're learning, and in analyzing multiple deals, we are also relying on information from this different experts, and we're comparing information. We don't just take their words as is. We're doing a lot of our own due diligence as well. So to tell you that these are things that you would do, just like when you buy a rental, like we said last 2 weeks, you're doing an inspection of that building to see what are the potential maintenance that could come up and all. In our case, we're doing due diligence on the people that we will be working with, because the people, the consultants, the architects, the builder, the engineers, they are part of the sticks that make the building stand in the hand for us.
Yeah, and those big cost. This is a big chunk of money. So you want to make sure that you're putting it at the right place with the right people. Yeah. Okay, sis. Let's wrap it up here. I think it was a lot of information. We probably will come back to this again with like almost a real time, a real example, because it's intense. In 20 minutes, that's intense. But please reach out, guys. Reach out if you have any questions. We're gonna check if we have our attendees have any question here, sis. I'm gonna stop sharing my screen at this point.